What happens when one of the most powerful voices in global politics pushes the World Bank to shift billions back into oil and gas? The answer could reshape the future of energy and your investments. While fossil fuel funding might rise, green projects could lose momentum. Let's explore exactly what this means for clean energy investors and the planet's future. The backstory. How the World Bank funds energy. The World Bank isn't just any bank. Think of it as a massive financial engine that helps countries build schools, hospitals, highways, and yes, energy systems. For decades, fossil fuels like coal, oil, and gas dominated these projects. They were cheap, powerful, and reliable. But there was one huge problem. They also released gases that heat the planet. By the mid-2000s, climate change had moved to the top of the world's agenda. Rising sea levels, stronger hurricanes, and hotter summers pushed the World Bank to rethink where its money was going. In 2017, it announced a dramatic shift. No more funding for new oil and gas exploration after 2019, except in rare cases. Instead, it pledged to invest heavily in clean energy like solar panels, wind farms, and energy storage. That was a groundbreaking decision. By 2023, the bank promised that nearly half of its total lending would go to climate-friendly projects by 2025. And the numbers backed it up. Climate finance from development banks doubled in just 5 years, reaching $85 billion in 2024. For many, it felt like a turning point. Fossil fuels seemed to be on the way out, while green energy was set to take over. But policies can change, and fast. Trump's pressure and the policy flip. Fast forward to 2025. President Trump is back, and he's turning the World Bank in a very different direction. His administration is pressuring the bank to ramp up financing for fossil fuel projects once again. The argument? Energy security. Officials argue that countries, especially poorer ones, can't afford to rely only on renewable energy. Gas pipelines, oil exploration, and drilling projects, they say, provide affordable and steady power that keeps economies running. A U.S. Treasury spokesperson framed it like this: an all-of-the-above energy strategy that provides financing for upstream gas would reconnect the World Bank to its core mission of economic growth and poverty reduction. The U.S. holds about 16% of the voting power in the World Bank, enough to veto major policy changes. That influence gives Washington enormous leverage. And Trump isn't stopping at the World Bank. His team is also urging other multilateral lenders, like regional development banks, to embrace the same approach. This isn't new. During his earlier time in office, Trump championed oil and gas as a way to keep energy prices low and create jobs. Now, with him pushing back against climate-focused rules, the ripple effects are spreading. Already, some banks have backed away from net zero alliances, signaling a shift toward fossil-friendly policies. It's like a domino effect. One major change at the top, and the whole system starts tilting. Climate finance versus fossil finance, the clash. Here's where the big tension lies. The world is racing against time to cut carbon emissions and slow global warming. Experts say developing countries alone will need about $1.3 trillion every year by 2035 to fight climate change and adapt to rising risks. Multilateral banks like the World Bank are supposed to play a central role in that effort. But if fossil fuel financing surges again, billions that might have gone to solar farms or wind turbines could instead be poured into oil rigs and pipelines. Picture it like a pie. The more slices given to fossil fuels, the fewer left for clean energy. That could slow the global energy transition and make it harder to hit international climate goals, like those in the Paris Agreement. Supporters of Trump's push argue that this is simply practical. Many developing countries, especially in Africa and Asia, lack reliable electricity grids. Renewable technologies, while improving, can be expensive and sometimes inconsistent. Imagine a hospital losing power during a windless night. Gas, they argue, can bridge the gap until clean technologies become cheaper and more reliable everywhere. Critics, however, warn that this risks locking the world into decades of pollution. Fossil fuel infrastructure doesn't last a year or two, it lasts decades. So every pipeline or drilling project funded today could keep pumping emissions well into the 2050s. What this means for investors. For investors, the question is simple. Where will the money flow, and how will that affect returns? If the World Bank pours more money into fossil fuels, oil and gas companies may suddenly look more attractive. New projects could mean more production, more jobs, and possibly higher stock prices. Short-term gains for traditional energy investors are definitely possible. But the long game tells another story. ESG funds, which focus on environmental, social, and governance standards, are still growing worldwide. Despite political pushback in the U.S., global investors are increasingly cautious about putting money into industries that face long-term risks from climate change. Floods, wildfires, and heat waves can devastate supply chains and profits. That's why many analysts say ESG and green funds will continue to attract serious money, even if fossil fuels get a temporary boost. Think of it like a seesaw. On one end, fossil fuels may rise for now, supported by government pressure. On the other end, clean energy remains attractive because it's increasingly cheap and future-proof. Investors will need to decide which side of the seesaw they believe will hold steady in the years ahead. ESG funds in the spotlight. Let's take a closer look at ESG funds. These funds don't just care about profit. They also care about a company's impact on the environment, its treatment of workers, and its governance practices. For the past decade, ESG investing has exploded in popularity. Under previous climate-focused policies, ESG funds had strong tailwinds. But now, with fossil fuel financing gaining traction, some worry ESG funds could lose ground. Here's the surprising twist. The data suggests otherwise. In 2025, even with U.S. political pressure, ESG investment worldwide is still growing. Why? Because renewable energy is becoming cheaper and more competitive on its own. Solar and wind are not only cleaner but also increasingly cost-effective. For many businesses and governments, choosing renewables is simply smart economics, not just a moral choice. So while Trump's push may slow growth in ESG funds in the short term, the long-term trend still points toward sustainability. In fact, some analysts predict that stricter standards may emerge, with fewer but stronger ESG funds dominating the market. Global reactions. A divided world. The world is far from united on this issue. The European Union and many climate-focused nations are pushing back hard, saying that a return to fossil financing undermines international climate agreements. They argue that public money should not support projects that worsen global warming. On the other hand, many developing countries are welcoming the shift. For them, cheap and reliable power is essential for lifting people out of poverty. Leaders in parts of Africa and Asia argue that they shouldn't be denied the same opportunities that wealthier countries enjoyed when they industrialized using fossil fuels. This divide shows just how complex the energy transition really is. It's not just about technology, it's also about fairness, opportunity, and survival. Trump's pressure on the World Bank could fuel a surge in fossil projects, offering short-term energy wins for developing nations. Yet, this move risks slowing the global clean energy transition and locking in emissions for decades. For investors, fossil fuels may look appealing now, but the unstoppable rise of renewables and ESG investments points to a greener future. Policymakers face a tough balance, ensuring reliable energy today while protecting tomorrow's climate. The choices made now will echo for generations. So what do you think? Should the World Bank back fossil fuels for security or commit fully to clean energy? Let us know in the comments below. And if you found this breakdown helpful, Don't forget to hit that like button and subscribe to our channel, Financial Success Hub, for more insights on global finance, energy, and investing. And don't miss out. We encourage you to check out the free goodies and resources in the description of this video. Until next time, stay informed and stay empowered.